Welcome to Markets Now. I'm Michelle Rook, along with Beadle with Paradigm Futures. Livestock lower on Tuesday, but the grains did stage a recovery. And Kent, how much of that was just short covering because that market was so oversold?
Well, I think some of it was oversold, short covering. We did have some good news today on a number of fronts in the outside markets. I think we felt a little bit better about the regional bank situation. Looking under the covers, I feel as though people realize that most of the regional banks are well managed with good risk management programs, and that there wasn't the likelihood of a contagion around the next corner. We also had a decent CPI report today that was in line with expectations, not worse than expected, which has been the case in the last few CPIs. So that, I think, helped. And then we had a couple of good pieces of news, or bullish pieces of news. We had the sale to the Chinese, 600,000 tons. There's rumors there could be more sales around the corner, maybe another million and a half tons to the Chinese. And we had our weekly crop condition reports coming out of the state entities in the Southern Plains, Oklahoma, Texas, Kansas. Oklahoma and Texas specifically having lower ratings, Kansas steady, but still a very low rating in Kansas as well. And wheat prices kind of led the way today. So just a lot of things that helped us, kind of consolidate and then finally rally in an oversold condition.
Yeah, you mentioned the problems that we've had here with bank debacles and maybe the fear going out of the market. Longer term, do you think this gives the Fed maybe a little bit of a push now to not raise interest rates as much in their March meeting? Is that kind of the school of thought here now or not?
Yeah, actually, the interest rates had come down on Friday and again on Monday. Now they are a little bit higher today, but the expectation from the trade is that they will either pause next week when they meet or raise rates only a quarter of a point. And 2 weeks ago, after Fed Chairman Powell testified in front of Congress, the trade was anticipating maybe a full half-point cut because of the hawkishness of his comments. So a little bit better outlook there for interest rates as well.
Let's also talk a little bit about the corn market in terms of the China demand that you said finally surfaced. Is it likely that we will see more? And is it because the corn market, the prices have gotten low enough where we're going to start to see a little bit of that demand pick up on the export front? Finally, we're competitive.
Yeah. I mean, a couple things on that point. First of all, with the lower interest rates, we have seen the US dollar break a little bit. And so that makes our corn a little more competitive. From the highs to the recent lows, that was a 60-cent break in nearby corn futures. Obviously, that certainly helps as well. And then keep in mind that Chinese corn prices are still well above $10 a bushel. It's very interesting when we look at the USDA balance sheet, where it says that China actually has 2/3 of the world's ending stock of corn supply, yet their prices are over $10. Something doesn't jive with those two things. And more than likely, it's that ending stocks number is overstated. And really all you can do is watch what the Chinese do and watch what their prices are. And, all of those things combined tell me that they could be in for more from the U.S.
What's the sense of the corn and wheat market now about whether the Black Sea grain corridor will be extended? There's been differing discussions about 60 versus 120 days, and that there's been no resolution there.
Yeah, so the Russians have proposed that they would allow a 60-day extension. The Ukrainians countered and said that was not acceptable, that they want to see a full 120 days. And so there is essentially an ongoing negotiation just about the length of time. The Russians are angry that they feel that while they're allowed to ship wheat and they're allowed to ship fertilizer, the rules on shipping have made it very difficult for them to do so. At least that's what they claim, and they want some resolution to that. And they'd also like to see the destinations be more humanitarian, according to what they're saying. I think they're just trying to, obviously kind of poke a stick at the West here a little bit, and because they're obviously angry that we're still here and providing support to the Ukrainians.
Soybean market lower, below the $15 mark, but I think still above the 100-day moving average. Do you think that market will get back over 15? And is the meal market likely to go back higher again?
Well, one of the things that we're going to look for in beans is the NOPA crush report tomorrow. And we've seen a number of crush reports where the size of the crush was a little bit below year-ago levels, despite the really strong margins that we've had. If we could see maybe a stronger than normal crush, and we start to get back to where we're crushing close to our capacity, we might see some support. I think we've probably come down far enough, certainly.
Yeah.
It doesn't seem to me that it makes a lot of sense for markets to be cheaper when you consider the size of the Argentine crop and the impact that that's going to have on meal supplies. And of course, soybean meal is held together actually remarkably well. It's been the soybean oil being dragged down a little bit more because of lower energy prices. But those crush margins are still really good. And ultimately, with the market shifting away from U.S. exports, we think that maybe some of those lower crush numbers might have been just availability of beans. Beans
Sure.
might be a little bit more available, and we'll see the crush numbers pick up. And I think that could help the attitude in the bean market.
So while the grains were kind of able to shake off the macroeconomic jitters, it looked like the livestock kind of got pressured by that today, and we're not able to divorce it.
No, I think that's exactly right. And there's a couple of things going on there. We're just really slow in our price recovery in the pork complex. We're seeing the CME index, rising 10 to 25 cents a day, and we've priced in a much quicker seasonal recovery in hog prices. And every day that goes by and we don't see those better cash numbers, the market gets disappointed and sells off a little bit.
Right.
Over in cattle, the worries about recession and the impact of this, keep in mind that sort of like the corn here a few weeks ago, the underlying attitude about cattle price has been extraordinarily bullish. There's been a very large fund position in cattle, and it just feels like with these outside markets, wavering a little bit, and equity prices wavering, obviously, up until the last couple of days, we're seeing that pressure in the cattle market as a result.
All right, let's hope we find a stopping point soon. All right, thanks so much for joining us, Kent Beadle with Paradigm Futures, and that is Markets Now.